Welcome. Good to go. Welcome everyone, and thank you for joining us today. My name is Sivan Pliskov, and I'm an Associate Director at Carbon Intelligence, and we'll be chairing this afternoon's panel. We've got a great event lined up today to explore the importance of carbon reporting and the different approaches that asset owners can use. We have some amazing speakers from across the value chain of the built environment who will share with us their experience, expertise, and advice on carbon reporting. We have some friendly faces on today's call who already know Carbon Intelligence, but I'd like to do just a quick introduction for those who are new to us. We are a team of strategists, technologists, and engineers who believe in business as the solution to a zero carbon world. And we work with our market-leading clients on multi-year programs to achieve their sustainability, energy, and carbon reduction goals through strategy, governance, data, engagement, performance optimization, and reporting. I would like also to thank IPSX for involving us in this event. Carbon Intelligence has recently partnered with IPSX, and we work together on developing clear guidelines for all admissions to the exchange on how they should be reporting and managing both embedded and operating carbon emissions. Now, before we begin, a bit of housekeeping. We'll be recording this webinar and we'll send it out to you after the event. You'll also see a chat box on your screen. Please do add questions throughout the webinar and we'll answer them at the end. Please can you note which speaker you're directing the question to? And if we run out of time to answer all your questions, we'll make sure to follow up them afterwards. Now, on to our wonderful panel. Thank you so much for joining us today. We have Guzman from Colliers, who does tactical reporting and engagement. Alex Green from BPF on carbon and transparency at an industry level. Grace Hammer with a sustainability reporting analyst from Land Securities. Paul Gehres, sustainability program manager from British Land. And David Delaney, group chief executive, IPSX. So thank you all. Starting off the discussion today, we're going to keep it broad. Climate reporting creates an accountancy for carbon, makes it easier to make decisions to decarbonize, and identifies risks and opportunities in the supply chain. So why is climate reporting important to your organization? Alex, would you like to start?
Thanks, Sivan. And thank you very much for the invitation to be here. So I think from an industry perspective and the perspective of the BPF, climate reporting, I suppose the first thing to do is maybe distinguish between carbon reporting and climate reporting in a pure sense. Clearly, carbon reporting is incredibly important, and in understanding what the carbon emissions of the industry are. But perhaps when we're talking about climate reporting in a broader sense, there are, of course, other implications to that, i.e. physical risk, transitional risk of the climate impacts, both on real estate, but also the implications that real estate activities have on future climate change. I think we know a reasonable amount in the sort of broad sense about the proportion of the pie that the built environment is responsible for. We see the headline figure of 40% of the UK's emissions are down to the built environment, but perhaps we know a little bit less about the specific implications and the carbon emissions associated with specific businesses, as well as real estate portfolios, and to some degree even at an asset level as well. So I think the reporting element of this is really important, just if anything, to give us a better picture of ultimately how the industry is doing, but then also what sorts of movement we need to make and how we need to move the dial to ultimately get to net zero by 2050. I think it also clearly facilitates a more accurate policy making environment. So especially important to us that we do a lot of work with government, and by understanding what the impacts are and who's impacting it to a greater degree, that's just going to make a much more accurate environment for making policy going into the future. There's also an element of adequately pricing risk into the market as well, which I think, again, transparency and more accurate reporting will lend itself to. I suppose also say it gives a good opportunity for both the industry and individual businesses to be introspective and just look at, you know, the long-term sustainability of the business models, but also the long-term sustainability of the built environment, and, you know, raises some important questions around you know, retrofit versus new build and the embodied carbon implications of that. I also think when we're talking about climate reporting, it's important to also factor in that we hope at some stage there will be a universal structure for that reporting, so that we don't end up in a situation where people are, different organisations are effectively reporting in really different ways.
Definitely. Thank you so much for that. That's really helpful. Perhaps, Grace, what does that mean for Landsec?
Yeah, absolutely, Sivan. And yeah, I would echo obviously what Alex said as well. I think for Landsec, we found that through collating the climate-related data from across the business, we become closer to the operation and performance of our various assets, meaning we really get a better understanding of asset performance, and this really helps us to drive improvements with the sites. So for instance, we have our monthly energy dashboards which we produce for our retail sites, and yeah, so we can get closer to the action on the ground and, you know, make interventions, for instance, if we see there could be improvements to be made in terms of building management and so on. And on the theme of the clearer picture through reporting that Alex laid out, we've obviously also really found that to be the case, that through reporting, particularly of our emissions, we've been able to find the highest impact areas upon which we should be focusing our energy. And one clear area that we found through our emissions accounting is scope 3. So our indirect impact accounts for 87% of our emissions, which is a really significant proportion. I know for most businesses, you know, it's also very significant, and certainly in property. So this is largely from tenant suppliers and our development activities. And although we may have less control in this realm, as it's our indirect impact, it's clearly really presents a great opportunity that we can intervene for some reductions there. And it also opens the opportunity to collaborate, because there are common goals here. It's not just us trying to reduce our emissions, it's also our tenants have various are also measuring and trying to reduce their emissions. So we recently conducted a study and found that 126 of our central London occupiers have set science-based targets. So that's doubled in the last 2 years, and we continue to see that increase. So by focusing on that, we're not only helping meet the needs of ourselves as a company and also our stakeholders, but also particularly our tenants and our customers. So yeah, driving forward that together is a really important opportunity for us and shows really great promise for the future. So I think these are the key things that we find, that climate reporting, and particularly carbon reporting, is a really profitable experience for us in the industry.
Amazing, thank you. And it's wonderful to see the progress. I mean, it does take a village, and I think we see more and more often now the other you know, moving parts of the value chain that are joining to this journey, and that's a wonderful thing to see. Andres, what does that mean to you at Colliers?
I think Grace and Alex are making, you know, very valid points. I think, you know, where we sit in the value chain means that we need to you know, partner with our clients in many respects, and there are, you know, clients that are perhaps going to be more advanced in that maturity you know, journey, in that scale of ambition at the same time. And the case with them is to more aligning, you know, with their goals, and making sure that, you know, we're providing the right data for their disclosure, but ultimately, you know, to see what the outcome of those strategies that they're putting in place is really going to be. So there's a big element in terms of accountability, and I think that's a very important point. You know, with the ones that are perhaps lagging in that journey, is about encouraging them, you know, to think a bit more long term, you know, to really push them to be a bit more you know, forward thinking, and I think that's when you know, the point around pricing the value that reporting on these issues brings to the table, not just for our investors, but from a whole stakeholder perspective, is quite key. So I think data becomes a key part of all of this, and I think hearing the challenges that Grace mentioned about what's the scope of your emissions, what are you really talking about when you commit to a certain form of net zero? Is it the construction of the building, or is it during the operations? This is a complex topic, and I think we need to acknowledge that. And we have moved from the why, I think, now to the how, and it's very important that we now give that accountability, to those real estate players, to make sure that those strategies are actually delivering emission reductions and are moving us towards a more resilient real estate future.
No, thank you for that. And I think it's, as you said, I think some players have already got to the point of the how, but I think there's still quite a lot that are in the why. And so we need to bring everybody to the same level so that we can move together towards a target that we've already set. Paul, how about British Land?
Thanks. I think obviously we at British Land mirror some of the similar comments of the other panelists, in that our investors and our customers care about the climate topic and are very, very interested in what we as an organization are doing to address the various climate-related concerns that they may have, both from a transition risk and physical risk perspective, but also in terms of how we are approaching net zero. And I think one of the things I'd emphasize is that the nice thing about doing climate reporting is that it really gives us this chance every year to structure, well, to evidence how we are structuring the problem and how we are approaching it from a programmatic perspective. And I think that's quite a useful thing to say, even before you get into the data, is that if we lay this out in a nuanced way, we can really show not just scopes and numbers, but actually how we are framing the problem and how we think that we're addressing this in a nuanced way that isn't just only operational carbon or only certain types of embodied carbon. So I think that's quite a great opportunity for organizations like ourselves. Likewise, with this type of climate reporting, we really get a chance to evidence our progress on the journey. So I think we found in our previous 5-year strategy, as things evolved over time, we really saw a chance to trial more on embodied carbon. And we've seen some great outcomes in terms of the embodied and carbon intensity of our recent development at 100 Liverpool Street. And likewise, I think there'll be a lot of exciting things that happen in the next 10 years, as we've all signed up to some interesting commitments with the Better Buildings Partnership. I think we're excited about the UK GBC's latest guidance documents and what implications those have for our portfolio.
Thank you for that. And last but not least, David, you probably you bring in the investor angle.
Hi, thanks, Sivan, and good afternoon, everybody. Yeah, I mean, I think about this from the point of view of improvement. I don't think you can improve unless you honestly assess where you're starting from and have a framework to assess performance. So for me, if one wants to improve and one believes that there's an intention to get to net zero, then the only way to do that is to, in financial market terms, mark yourself to market, understand where you're starting from, and then monitor your progress. So within that, reporting is critical. And just to comment, bring up on Andrews's point, within that, I see accountability. It's the only way to get to net zero is through people feeling and organizations feeling a genuine accountability to achieve that. And so therefore measurement and reporting is critical. One of the challenges, though, I think within measurement reporting is the consistency and homogeneity of that. One of the challenges for organizations is the fact that there are different ways of reporting, there are different ways of measuring net zero, there are different ways of looking at carbon usage. And so I think one of the challenges that the industry has is to ensure that there's a consistency in measurements and a consistency in reporting, so that it's easier for organizations to show when they're doing a good job, and frankly, it's easier for organizations to be held to account when they're not doing a good job. The other reason I think it's important is that it allows one to better understand, you know, what one is doing, where one's emissions are, and where one's being impactful. You know, Grace touched on this, I think, from Landsec, where, you know, by doing measurement and reporting, it allows one to better understand what's going on with one's building, and therefore, you know, move forward and improve one's position. If one wasn't doing measurement and reporting, one wouldn't be able to do that. So generally, I think it's critical that we have good consistent measurement and reporting, as it allows really accountability of asset owners.
Yeah, all very valid, important points. And I think it kind of brings us to the next question. You've raised already many of the challenges. Reporting against climate risks is relatively new and has only recently become really important and mainstream. So our panelists could speak to the key challenges in effectively reporting against climate risks. Grace, would you like to start?
Yes, absolutely. Thanks, Sivan. So yeah, of course, there are a number of challenges, and as you say, lots of our panelists have already touched upon those. David mentioned, for instance, consistency and homogeneity in reporting, and I think, yeah, that's certainly something we find, I'm sure Paul would attest to as well, that we find there a proliferation of frameworks and benchmarks, and so, yeah, different ways of reporting, which becomes something of a challenge. And also, yeah, looking at which benchmarks, because we currently respond to, I think, over 10, reaching 15. So that's a number of benchmarks to report through, and as well as the frameworks. So that's sort of complexity. But panelists have already touched on this, but in order for us to decarbonize, we really need to look at the whole value chains of our buildings. So we need to look at both the operational carbon, upon which there's been traditionally quite a lot of focus, but ever more coming into the fore is the embodied carbon aspect. So as people know, that includes sort of the construction, building processes, design, right through to fittings, but also then the deconstruction, end of life, and trying to get that data accuracy when it comes to you know, calculating embodied carbon is a challenge, as indeed it is with all sort of scope 3 categories. So as I said, you know, it's a huge proportion of our impact in scope 3. Embodied carbon, we work with a consultant, and there are necessarily quite a few estimations involved in that. So what we do continually, not only with the embodied carbon data, but also with supply chain data, is try to increase the proportion of primary data included within that, so we have a more accurate picture of our impact. And scope 3 is never going to be a precise exercise, but you know, we're trying as hard as we can to make sure it's as accurate as possible. And then when we look at tenants and the collection of tenant data, so we have tenants for whom we procure energy on their behalf, and then we have other tenants who procure some of their energy. Parts of it we procure HVAC, and they will procure the fittings, the lighting, and so on. And then there are others who completely procure their own energy. So to try to collate that data again every year becomes something of a challenge and can be quite a manual process. But what's really great about that process, and as we touched upon earlier, and lots of the others have also alluded to, is that opens up the space for us to collaborate with our tenants when we are coordinating this data collection with them, and share knowledge and best practice. And you know, not all of them, as you said, Sivan, are going to be super advanced on that journey. Lots of them are, but some of them aren't. So it's about working with them and finding common ground and sharing that best practice and learnings. So although there are those challenges, I think from all of them comes some really good opportunities for us to progress forwards. So yeah, it's good to look for those opportunities where you find those challenges.
Yeah, I think that what we learned from our clients, that gathering tenant data is one of the most supreme challenges, and we're all trying in many ways to come across those. I mean, have you considered, or have you already perhaps put in place somewhat of a green lease or a clause that on all new leases that they have to share with you in one form or another?
That's a good point. We actually recently revised our clauses, and yeah, that is very much within the clauses. It's then the mechanism as to how we, the structure we put around that and how we follow up on that and ensure it's collected in a consistent manner, and sort of, that we're working together to achieve this. So yeah, I think that's a really good mechanism by which companies can achieve that, and tackle that sort of tenant data challenge head
Definitely.
on.
Thank you for that. Paul, I'm sure there's plenty of challenges that you see in your reporting day to day. Please let us know.
Great. Yeah, obviously we have a lot of overlap with Grace's organization as well in terms of some of the challenges we deal with. I mean, I think I would just add some comments around some of the context where I think on a piece of good news for this, when it comes to boundary setting, the Royal Institute of Chartered Surveyors, I think it was in 2017, launched their whole life carbon guidance. And I think that for the industry acts as a really useful framework for the life of a building. And I think if one builds their strategy around this framework, there are implementation challenges around data collection or engagement where we don't have management control on a certain class of emissions. But the actual boundary setting feels quite comfortable because this is what a building is, and this is the life story of a building. And so I think that's quite helpful to have that type of base or bedrock for an approach to climate and real estate. And when it comes to accounting, then it's quite neat in terms of how you would cut it into scopes 1, 2, 3. I mean, regardless of whether you think it's better in 3 or 1 and 2, if you have that type of whole building framework, it does make this just quite neat. And I think it would be easier for an investor to reconcile between companies if there is that kind of common approach to what a building is and how it operates from a emissions perspective. I suppose the other thing that's interesting in terms of challenges is I agree with the point on indexes and trying to ensure that we, you want to perform highly on indexes, but also you want to ensure that the indexes reflect your strategic efforts on climate change, and you don't want to be led purely by indexes evolving requirements as well. I mean, that's somewhat, I think, the reverse of our plan. So I think one of the things we'll be working through as an industry is that many of us are signed up to the Better Buildings Partnership's climate change commitments, and that sets out a specific set of requirements and has some interesting points on the scope of what should be included within these commitments, particularly for an organization. A number of us are signed up to have science-based targets, which has specific requirements about the trajectory of the reductions we need to achieve. And I'm happy to say that by coincidence, our targets were announced as approved today, which is not planned, but we're happy to hear that was validated and validates our plan going forward.
Congratulations.
Thank you very much. But then lastly, I would just note that the UK GBC, the Green Building Council's requirements around specific assets and whether we can say they're net zero in construction or in operation, I think those are interesting requirements as well, in that distinguishing between the organizational strategy or portfolio strategy and specific assets is quite an interesting thing. And we see that different indexes review us in different ways. And so I think how we, in my role and Grace's role, find balance across these different requirements is quite an interesting thing for us to work on in the next 10 years.
Thank you. Andres, is something that you wanted to add here?
Yeah, no, I wanted to say 2 things. I think there's definitely a conflict, between those indexes that that Paul mentioned and the impact that you want to have on the ground. And I reckon it is the latter that we should be focusing on, again, to make sure that our emissions are being reduced, and I mean that ultimately that we're providing healthy environments and efficient assets. But I just want to maybe shed a bit of light in terms of that engagement with tenants. So one of the ways that we've found effective to access their data, I mean, obviously, green leases are becoming a bit more common these days. But we find that if you offer something in exchange, you might have a better chance, to engage and to open that communication channel. So providing green energy is something that most landlords already do. And actually the UK Green Building Council produced some guidance recently on the types of green, tariffs that are out there. So it's important to look at those. But in most cases, in us, that we procure energy on behalf of our entire managed portfolio, are in a unique position to then offer those tenants that contract directly with the energy supplier access to that green basket. So those are tariffs that suppliers might not necessarily offer to the market wide open. And once you say, well, look, here's a tariff that it will produce additionality, is genuine green, and you can have access to it in exchange. We want to see what data, what kilowatt hours are going through those meters. I think you generate a different conversation, and ultimately, it's a win-win for both parties.
Absolutely, and thank you very much for that. I think you touch upon a very important point. Is when you ask for something, you always need to suggest something in return. And I think the what to suggest to them, because again, not all of your tenants have the same DNA. Some are very small, some are large, some are part of corporations that might already have certain targets or strategies set in place, and then still. So I think it's a constant challenge that we keep coming up with, different suggestions, different angles to make sure that, to bring them on board on this journey. Thank you all for that. And we'll just move to the next question. And this is really regarding how will people would invest in their assets differently under a net zero target? And how does this lead us to transparency as means of disclosing information about the assets in new ways? Perhaps, David, would you like to start with that? Again, making sure that investment decisions are probably clear so that investors can make informed decisions.
Great, yes, thank you for that. This is an interesting one. I think when you talk to investors, and particularly people like pension fund trustees, the question of ESG and net zero has gone from being something they might think about asking at the end of the meeting to the first question on the notepad. This is front and center, excuse me, absolutely what they are now focused on. And so, it's going to have a huge effect going forward in how they think about investment. In simple terms, I kind of think about it in relation to stranded and non-stranded assets in very simple terms. What they're going to be focused on is not having stranded assets. And so therefore, the understanding of how an asset owner is dealing with approaching net zero, how they're monitoring it, and how they have a credible strategy for achieving net zero, and will they do that, will be, I think, a critical question in how investors consider, whether they consider investing. On the other side of the coin, you will almost definitely end up with some stranded assets. Now, I say almost definitely on the basis that it's not clear to me that net zero has been defined perfectly, or indeed that we have government guidelines that will explain what could end up as a stranded asset. But it strikes me that going forward, we can have a real estate world in which we have quality assets and stranded assets. Now, just because we've got stranded assets doesn't mean that no one's going to want to own them, no one's going to want to invest in them. It just means that maybe the criteria for investment is going to be different. If you look at some other markets for assets, the equity and bond market, distressed assets trade very happily in those markets. And I could see a similar situation where you have stranded or distressed assets in real estate that also, are in demand at an appropriate price. And that, you could easily see vulture funds setting up that, are going to be seeking to target those assets. So I can see potentially a bifurcation of the investment market going on, where you can see safer assets that have a clear plan to get to net zero, having a certain type of investor base, and then you have an alternative set of assets that are either stranded or have a potential to become stranded assets that will have another type of investor base. Now,
and probably this definition will be clarified in the next probably 10 years, hopefully so that then it will be, we're gonna catch up with ourselves in the last 20 years, if you wish, before we have to become net zero by 2050.
Yeah, and so to that point, Sivan, it's going to be very interesting to see when it's uncertain, as now, for example, where those assets fall and where investors start to think about, what risks they want to take. And some investors will absolutely not be wanting to take any risks, and they're going to be sitting there saying, well, I only want, EPC A, and the top BREEAM ratings. I'm not going to go anywhere near anything that may risk becoming stranded over time. Other investors may take a more aggressive view of that, and obviously it'll be interesting to see as price develops over the next few years, as you start to see price differences between those buckets of assets. And to your second point, transparency then becomes critical in this. How you understand an asset and how you understand how it's developing its net zero strategy, and how you understand its carbon footprint and how that's developing is going to be critical in investment. And so, that transparency aspect, I think, in real estate, is difficult. Realistically, particularly when you're looking at portfolios of buildings, portfolios of assets, you may see that there's a great difference between some of those assets in their path to net zero and their ability to achieve net zero. And so, one of the things that we're very keen on at IPSX, and one of the reasons we're working with Carbon Intelligence, is to really help issuers to be able to understand their obligations in relation to net zero, and then provide that transparency to investors, so that investors can very clearly see asset by asset how the management will achieve net zero, and therefore make their investment decision accordingly. And we see that transparency piece as absolutely critical here, and going forward, to allow investors a good understanding of assets and how they're going to position themselves within a net zero world.
Thank you for that. So that's from the investor's point of view. Alex, I come to you now to look at it from the policy point of view. What should the market as a whole be doing to become more transparent on climate risks? And is there a light at the end of this tunnel?
Thanks, Sivan. So just to firstly, I guess, pick up on some of the points that David's made, I think absolutely agree. And from a policy perspective, there is a real risk of stranded assets, given the current, I guess, state of the policy environment, especially with things like minimum energy efficiency standards. And there's a real risk that some buildings won't be able to comply with those, and in some instances might be exempt from those regulations, but ultimately can't get up to a standard in the future that they can be occupied, i.e. there might be a very discerning market of occupiers that ultimately say, no, we don't want to occupy something that's that energy inefficient, sorry. And what happens to those assets? And I know David mentioned, there might be a sort of two ends of the spectrum to people who might still want to invest in things like that. But then it raises the big question of embodied carbon, and if you're having to demolish things because it's just not feasible to improve those from a carbon perspective, then the option then becomes demolition, and how does that add to our sort of embodied carbon budgets over time? I think in terms of transparency, in a very simple sense, how can you improve something you can't see? So that would be the question I pose. It's really important that we have an idea of what's being emitted, in what ways, and by whom. And I think it also plays into some of the challenges that people have raised already in terms of who's actually responsible for measurement and who's responsible for improvement. Because again, from a policy perspective, the onus has very much to date been on building owners and asset owners. But we know, and we've heard from other panelists, that actually it's not always that straightforward in terms of getting the data, and in some subsectors it's near impossible because of the way the leases are arranged, that it's near impossible to even get some of that energy consumption data from occupiers. So there's that element to it as well. But I think in terms of, again, transparency, we represent a lot of the leading lights in the industry, but I think transparency will play a role in bringing the sort of tail of the industry with them as well. because ultimately you're sort of shifting the bar for them. And if they want to be competitive, and if they want to be responsible businesses, if they want to, have a good reputation, they're going to have to effectively play with those leaders and make sure they're on a relatively level playing field. I think the final point of transparency I'd make is probably also that this has significant aspects of, I guess, supply chain and how the supply chain reacts. The more transparent I think we are on reporting, the supply chain right the way through to construction and real estate can see that the importance of this to their clients. And again, as already been mentioned, I think it can help them shift the dial. And another aspect of that is government policy and government internal procurement. They have a lot of procurement clout, and therefore it'd be interesting to see if we can move the dial on things like reporting, as well as what that means for a given organization's procurement process. I think that will have a sort of knock-on effect all the way down the chain, hopefully.
Thank you for that. And actually, Andres, if I look from your point of view, how does net zero affect your investment? Is it in improving buildings? I mean, how does that look like at Colliers?
So we will be advising our investor clients on what type of technology solutions they should be implementing, and I think there's a range of options out there, but in terms of how this will impact investment decisions, we also need to look at what the occupier is doing. And if I think about the number of occupiers that have committed to some form of carbon target, there's probably millions of square feet out there to be met. And speaking to our occupier department and putting my hat as a corporate, going to find net zero space out there is not a simple task, because again, we start asking questions that don't necessarily have an easy answer. Net zero is something that you have to maintain for a long period. We know that buildings need to perform at a certain energy intensity to meet that operational net zero demand. And what I see is that not many landlords are equipped to provide that information to prospect tenants. So that's a dynamic that I think needs to change to really instigate that market demand, which is ultimately what's going to have an impact on asset value. And I wanted to say, I think Alex mentioned a really key point, which is the response from the supply chain. And I would think that what we're lacking a little bit now is that long-term view from a policy angle that will enable the supply chain to make the investments required to drive efficiency and minimize costs in the future. So I mean, we know that there has been a policy gap for a number of years, and it seems to be that gap, the size of that gap is not as big as it used to be. But I think we need to look at really long-term strategies to enable that transformation.
Thank you for that. We'll go on to the next question, just because I'm seeing quite a few questions for the end. So we're going to move on, and I think we can just perhaps finish the panel discussion in a very optimistic and positive way. Is what excites you about where we're going on reporting and managing climate risks? Paul, would you like to take this first?
Sure, of course. I think the exciting thing is probably that there is a lot of momentum on trying to define topics like net zero. I think there's generally quite a lot of acceptance around initiatives like the Science-Based Target Initiative, and it as the benchmark for saying that your targets are sufficiently robust towards what we're trying to achieve in terms of a low carbon future. And I think that makes implementation a lot easier for us in general, because essentially what over time, if we are able to standardize more of these things, such as determining whether a building is net zero, and whether that's through traditional assurance like ISE AE 3000, or whether there needs to be a certain certification, as we formalize some of these things, I think it will become easier and easier to just focus on the implementation elements of this. And I think that's great. That's really what we all, I think, the vision we share, and I think that's the optimal thing. To kind of conclude the discussion element, where we discuss the different ways we could frame this journey we need to go on. We need to just pursue the journey, and I think we're getting to that point, which I'm excited about.
Lovely, thank you. Grace, you mentioned briefly before your assignment around collaboration along the supply chain. Would you like to say a little bit more about that?
Yeah, absolutely. There are many things I'm excited about in this space, so I think what's quite interesting is when people look from outside the industry, they see property as potentially quite a static and slow-moving industry, and I think the opportunities that we identify from the climate reporting and carbon reporting will give us the chance to sort of reinvent a bit and identify opportunities for innovation and collaboration going forwards, especially under, for instance, Build Back Better. And this is something that has been also accelerated by COVID. So, there are positive things that have come out of this. But in terms of collaboration, so essentially, if we approach it from the lens of reporting, through measuring our embodied carbon emissions, we can identify these areas of high impact, as we were sort of discussing earlier, and influence the design decisions accordingly. And so particularly when this narrative is then supported by our 1.5 degree science-based target, which forms the backbone of our net zero commitment, and as Paul rightly says, there's really quite some momentum around this, so we can really bring along our tenants with us on this journey. And one example of innovation and design, which I thought has been really impressive recently, as in the move towards net zero design, is our Timber Square. And essentially at Timber Square, on the South Bank, we are retaining 25% of the structure, which was the 1950s print work. And by retaining that, we're really saving a lot of embodied carbon that otherwise would have been much higher at this point of the design stage. And also because the construction industry accounts for 30% of UK's total waste generation, we're also avoiding that waste, which is really great that we can have that dual positive impact. So then on top of that, we're putting a hybrid steel and cross laminate timber structure, which is currently actually very unusual in commercial buildings in the UK. So this really gives us significant inroads to reducing the embodied carbon impact of this Timber Square building, and then the timber actually acts to sequester and lock in the carbon, drawing it out of the atmosphere. So that's something that's quite popular in North America, but not yet in the UK. But having that measurement and understanding the impacts of these different materials through the reporting helps us helps guide those design decisions and create that innovation and collaboration that potentially from the outside it looks like we're lacking. And I think in general there's just a lot of space for industry collaboration, as we see through the climate group initiatives, of which we're a member of EP100, EV100, RE100, and they're sending a really strong market signal that this is the direction that the industry wants to head in, and it's only together that we can have that positive impact. So yeah, I think that's the thing that excites me most, that element of collaboration and innovation in the industry and really moving it forward as a result of this reporting.
Lovely, thank you so much. Andres, we're moving to you. So you mentioned some wonderful, you've been very excited about companies now breaking tradition, about the new hires and what they bring on board.
Yeah, I think, I echo what Grace said about looking at the industry, from the outside. I think with the rise of the, prop tech movement, I think it was very clear that change wasn't going to come from within. And I'm excited because, you know, if you take our property management department, the last few hires, you know, in the last couple of years or so, have not necessarily been, you know, the traditional disciplines that you would expect, you know, from a surveying discipline. So we've had, you know, a customer experience expert, you know, who's actually a hotelier by you know, training, tech you know, guru, and a couple of data scientists, you know, to help us you know, join all the different systems you know, that we and our clients use. And I'm excited because you know, obviously one person cannot change you know, a whole company, but if I look at the impact that those, you know, 4 or 5 people have had in the last couple of years is incredible, is massive. And I think, you know, for us, again, because of where we sit in the industry, you know, I think we almost have a responsibility to instigate that collaboration. You know, we can speak to the M&E contractors that we appoint in conjunction with our clients, you know, on site, with our FMs, you know, with our property managers, with the occupiers, and you know, see if we can all be singing of the same hymn sheet. And I think a key part of that, again, is to all of us be using, you know, the same data sets, you know, so we can all learn and you know, update one another on what's working and what's not. Sivan, I think you're on mute.
It had to have been. It was so 2020 to say you're on mute now. Do apologize. Yes, David, what makes you excited about where we're going with this?
Okay, I'll give you a short answer because I see there's an awful lot of questions coming.
I know, isn't this exciting?
Two things make me excited. One is just the momentum that is clearly building in this whole space is absolutely fantastic. You know, 5 years ago, we wouldn't be having this discussion. We simply wouldn't be having this discussion. And the fact that we're seeing this momentum is absolutely fantastic. And the fact that, you know, investors have, you know, are having serious discussions about ESG. I mean, the development of ESG funds is obviously, you know, growing exponentially over the last couple of years. And that to me, I find hugely exciting. The other thing I find exciting is the ability going forward to actually work with our issuers to help them on this. You know, I think that, you know, working with building owners and managers to help them to develop a zero carbon footprint is going to be hugely exciting. So those are the two things that excite me.
Thank you. And Alex, last but not least, and what excites you? And I'm already going to open one of the questions. We have one question here saying, can the panel give their experience of how government and utilities are engaging in the discussion on carbon reduction? Specifically, individual buildings may be zero carbon, but the district supply may negate the efforts. So what excites you? And would you have anything to say to our question there?
Thanks, Sivan. Yeah, so in terms of excited by this, absolutely. And I think, you know, one of the great things we'll hopefully see is potentially like aligning boardrooms and consumers a little bit more closely. I suppose in our case, consumers being, you know, occupants. You know, I sort of liken it to the instances of, you know, consumers consuming products in the wider economy are now much more discernible in terms of, you know, the sustainability of those products and where they shop and what they buy. And therefore, I think, you know, that this question could very much align boardrooms, and we shouldn't forget that obviously real estate effectively, you know, supports communities across the country. And I think that's, you know, a potential exciting part of this is in some degree sort of democratizing that question of investment in real estate and to what extent those investments are sustainable. And very quickly on that, I suppose I'd say, as if by design, yesterday the government launched a consultation on mandatory disclosure, climate-related financial disclosures, with a potential implementation date in April 2022. So there's a clear direction of travel here, and that'll be for, you know, all UK registered companies. So very timely. On the question from the panel, great question. I suppose less of a perspective on the utility side, but more on the government side. government absolutely engaging with this agenda, and as I guess exhibited by the number of consultations that have come out of late. They're very keen, of course, and they've set some, I guess, medium-term targets. I suppose the thing that comes up for us consistently is that in order to give the industry certainty, there needs to be a much more longer-term trajectory for what we're doing with regards to reducing carbon emissions. Let investors and property owners and developers understand where they're going to need to be. We know net zero in 2050 is a very broad commitment, but where are they going to need to be in terms of regulation? And that's almost certainly going to help with people making their decisions in the short, medium, and long term. I'm not sure I've specifically answered the question around utilities and energy networks and so on, but that's our perspective, I think.
Thank you for that. That's okay. We're just going to move on to the next question. No one will say anything to the contrary. First of all, they're saying thanks for the interesting discussion. So thank you, back to you. Where do you see opportunities for tech-based innovation that may help your organization in delivering the net zero developments? Andres, yesterday when we spoke, you mentioned that you're quite excited about the geeky aspect of it, about the tech developments. Is there anything that you wanted to share about that?
Yeah, I mean, just to say that we've been probably too focused on energy efficiency, and rightly so. We know that's what we need to do, to decarbonize our portfolios. But we shouldn't do it at the expense of occupant well-being. And I think the technology interventions that we have now allows us to have almost like a third, dimension, to building performance. So, to take, for example, the benchmarks that we've been using, for years, that have been incredibly useful in identifying assets that are outliers, from an environmental impact, point of view. But if you now add, to those benchmarks, whether the space that they are providing has a good environmental health indoors, then you're probably going to be filtering a lot of those parameters through the lens of what the occupant actually cares and should absolutely get. And technology is allowing us now to have that visibility. So I'm really hopeful that we're going to make that part of our day-to-day, and as we come out of COVID and we're starting to think about getting back to the office, I think those that visibility is going to actually become a key parameter, not just for the occupier, but from an asset marketability perspective as well.
Thank you for that. And Paul, perhaps you can help us with the next question. The person asked if we could discuss physical risk. Legal risk can be addressed with money, retrofitting the building or replacing it. But what if the building actually sits on a eroding cliff or face or riverbank? How is that being addressed in terms of stranded asset risk, or how do you address it at British Land with in terms of reporting?
Well, it's a good question.
How many buildings that are
I think
climate risk?
I mean, I think it would be interesting to see in a year's time. I think a number of organizations, including ourselves, will have conducted kind of the full T50 scenario analysis, and so it'd be interesting to see both the physical and the transition risk lessons that are conveyed in the annual reports in a year's time. In terms of what can be done, I think there's a number of tools on the marketplace to assess the exposure of a given asset, not just in terms of its geographic location, but also how it's situated in that physical space in terms of its elevation. And there's a number of there are a number of tools out there available to, I guess, identify the levels of risk exposure that exist. I think beyond that, then the general conversation that one would have next is it's about procedural. I mean, it really depends on what the physical analysis says. It's hard to say exactly. But in general, if there is some degree of risk exposure, you would expect that the next conversation would be in part operational, to discuss to what extent there are actually mitigations available to reduce the level of risk that the actual asset exposure identifies. because I think certainly there is a difference between theoretical risk due to a proprietary model and the actual contextual risk of the asset and how it's managed. And so I realize that's probably a vague answer to the question, but I think that's the type of analysis that I think will be looking to hopefully standardize in the next decade so that we can have a more comparative analysis between different asset types and asset classes. And I think it'll be very interesting. So I'm interested to know how that resolves itself. I don't know if I can provide a better answer than that at this point.
No, I think it's very, and you've raised the TCFD, and I think the more frameworks bring climate risk into account and into that discussion, then we will move forward and we will see progress. So it's much to be seen, and I think it's where, you know, we discuss, I mean, Andres was saying we're discussing a lot of energy efficiency and sustainability, but there's a whole part about climate risk that needs to be more part of the discussion and of the plan moving forward. So we'll get there. David, there's one question here that perhaps you'll be able to shed some light on around bank lending and net zero. Are banks including net zero criteria in their lending considerations, and will this become increasingly important?
I really hope they are, because it is going to become critically important. You know, as we talked about before, net zero is going to be a key risk in lending. If you're lending on real estate, you know, it's going to affect, as one of the panelists said earlier, you know, the attractiveness of tenants wanting to rent a building, and also, you know, at the extreme, you know, the potential for an asset to become stranded. So if banks aren't considering net zero, then they're really missing a trick, because it's only going to become more and more critical. There was another question earlier about, you know, whether there's a premium starting to appear for, you know, better quality assets with better carbon footprints. You know, and the answer I'm hearing from the agents is yes, there is. You know, people are they're trading at a lower yield, and people are prepared to pay more rent to get into a better quality building. I mean, I'm sure Andres has got some observations on that, but you know, this is going to be critical for banks, and if they aren't thinking about it, they're really missing a trick. And I certainly, the bank shares that I own, I hope those banks are thinking about it.
Any of the other panelists would like to? Oh, Andres, go ahead.
Yeah, absolutely. I think, you know, the lending sector in general is rapidly getting to grips, not just with schemes like, you know, TCFD, but I think they are understanding the level of influence that they can have in shifting, you know, our economy towards a low carbon economy, and I think it's inherently a difficult task, because our sector is not used to, you know, thinking in a cycle of more than, you know, 5 years, you know, let alone a long-term you know, net zero target that might span over, you know, decades. But also is that change in terms of instead of looking backwards to what the impact has been and quantifying, you know, what emissions, you know, have been emitted, is about looking forward, right? You know, what are those potential risks? We know that climate risks, either, you know, the physical risks or the transitional risks, are going to have an impact on asset value, and I think, you know, maybe from an insurance you know, point of view, we need to see you know, how those schemes are being integrated into their underwriting process. You know, the same with our valuers. You know, we're sitting down almost on a weekly basis, you know, to discuss how is that this risk exposure is ultimately going to impact asset value. But I just want to also quickly make a remark, and is that you know, value is not is a rather subjective you know, topic. Is a lot to do with market sentiment, and well, you know, guess what, the market is realizing now that those are important trends. So that's what's really going to, you know, to drive these issues in the lending and insurance sectors.
Well, thank you all very much. I'd like to thank all our panelists, Alex, Grace, Andres, Paul, David. I'd like to thank also Carbon Intelligence and IPSX for hosting this webinar today. And most of all, thank you for joining us, all of you out there, and hope you found it as insightful as we have. Have a wonderful afternoon.
Thank you.